Chipotle has just released its first quarter earnings. To help break it down, I'm joined by Jim Salera. He's an analyst, institutional equities and research at Stephens. Thanks for your time.
Yeah, thanks for having us on.
Let's talk about first quarter revenue, which came in at $2.9 billion, which was a slight miss from the estimate of $2.94, and then adjusted earnings per share 29 cents, so that beat the 28 estimate. The miss on revenue, what's your guess as to why?
Yeah, so I think, the key metric here is the same store sales number, which came in, as you mentioned, lighter than expectations. What we saw in the restaurant industry is, a decent start to the year in January, but then cold weather and kind of an extended flu season in February bring that down. And then March is where you started to really see a fall off in consumer sentiment. So not that there's necessarily anything deteriorating fundamentally with the consumer, but a big step down in sentiment with all the trade uncertainty and kind of uncertainty of policy out of Washington. And so I think what you're just seeing is consumers maybe taking a little bit more cautious approach about discretionary spending, and that obviously impacts things like restaurants.
And you think part of it was just weather related, so something passing through?
Yeah.
Okay.
And I think that's going to be a key point that investors are going to look for on the call is what's the line of sight as we get into 2Q. Chipotle launched a hot Chipotle honey chicken offering at the beginning of March. And so that's been a very successful LTO that they've tested. And so seeing what the impact there could be and how they expect that to kind of carry into 2Q and beyond.
Yeah, I did actually try that. It was good. Okay, let's talk about exposure to the Tariff Board. Do they have exposure here for their input costs?
Yeah, so they have a pretty diversified supply chain. They only source about 50% of their avocados from Mexico. So a little bit better there. But at the same time, if tariffs are applied to all trading partners for the U.S., it doesn't really leave you many places to hide, regardless of how diversified your sourcing is. It seems like the commentary out of the Trump administration has been shifting more and more towards getting deals done. And so I think to the extent that that can help improve consumer confidence, you could see kind of a snapback in consumer spending. And then we'll just have to see where tariff rates shake out, across the different countries.
Let's talk about expansion for a moment, because they have been opening up stores at a rapid rate. I'm wondering, I'm not sure if you've even had a chance to look at whether or not they've provided guidance and if they're still planning to open stores at the same rate they've been. And we'll talk in a moment about Mexico, but just generally, have they offered anything on that?
Yeah, they reiterated their unit development guidance. It was 315 to 345, which is what they mentioned before. Still ample white space to continue to open these stores. And, they find that especially if they go into small towns or areas where they don't have kind of a diverse selection of restaurant options, that these Chipotles do phenomenally well. They're also talking about opening 80% plus locations with a Chipotle lane, so drive through, and that just helps with the speed of order and people getting being able to put more throughput through a restaurant.
Let me ask you about the expansion to open some of these restaurants in Mexico, because it seems like a risky idea taking Mexican food from outside of Mexico into Mexico. What do you think of it?
Yeah, so, Chipotle has done a good job expanding in other regions, Middle East and other places outside the U.S. I think it's really going to be kind of a test to see how well it can perform. This is more of a 26 thing. They haven't really talked about kind of the size of the opportunity there. But certainly if there's an opportunity to have a footprint in Mexico, you wouldn't want to leave that untapped. Chipotle are very successful operators in terms of bringing the concept outside of kind of the core U.S. footprint. And so we'll see if there's any commentary. Again, that's more of kind of a future expansion. So I think the primary focus on the call is going to be U.S. consumption and kind of the health of the consumer and where they see that progressing. Yeah.
What are the other questions you see coming up on that phone call tomorrow? What do you think investors are going to be worried about?
Yeah. So again, a lot about where they see the consumer trending, any thoughts around pricing actions, portion sizes. It's very important for restaurants to be able to communicate kind of a complete value offering. So part of that comes from affordable pricing. The other part comes from generous portions. And so kind of finding the right mix of price and the amount of food that you get. So I think you're going to see that be a topic of conversation. And then again, where they see the consumer trending, how some of their limited time offers are going to play into demand generation, all with kind of the underlying goal of trying to assess what's the same store sales opportunity for the remainder of 25, because that's really the key metric that drives the stock here. And I think one of the reasons why, despite the earnings beat, it's down today is I think is that same store sales miss.
Okay, so where do you see the stock, the price of the stock being later in the year? And if you can sort of expand on the reasons for that.
Yeah, so if you underwrite kind of improving consumer, I think you'll see shares kind of re-accelerate and pick up some momentum. They did lower their same-store sales guidance. It used to be low to mid-single digits. Now it's just low single digits. So I think, that kind of indicates maybe a more cautious approach to the consumer, cautious outlook for the consumer for the remainder of the year. I think that's really, again, going to be the key factor, is trying to underwrite what the U.S. consumer does and how that impacts same-store sales. If we see that accelerate and we see the consumer improve, I think there's upside from where we are. If not, probably treads water around kind of this 40, 45 level that we see it at today.
Do you see them having to slow down their expansion if, as you mentioned, the U.S. consumer takes a backseat?
I think from that perspective, they take a long-term approach in terms of unit development. And so, as you mentioned, what we're seeing right now from the consumer is, I think, sentiment-driven. There's some weather dynamics in there. So when they're planning out the new unit development, it's not for 3 months or even a year from now. It's really establishing a durable footprint that they can grow. So I don't think you would see any material change there. We'll be curious if they give any commentary how tariffs might impact build costs for the new units. That's something we haven't discussed, but something that I think if you're building 300 plus restaurants, just things like kitchen equipment, light fixtures, tables, things that you don't really think of that might have cost impacts from tariffs. So that might be something else to watch out for on the call.
Got it. Good point. Jim Salera, appreciate you joining us on this. Jim is an analyst, institutional equities and research at Stephens.